The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Darrell Martin.
Welcome, folks. Tom O'Brien. Appreciate you growling and prowling with us out here at 2015. Right now, we get the Dow Industrials up 81, Nasdaq up 15, S&Ps are up 5. You get gold down 12.20, silver's down 4 cents. That is bonds. You get the 10-year up 11 ticks, the 30-year up 30 ticks. Bonds, folks, are doing an ABC structure on the way up. And King Dollar, what's she doing? She's up 558 ticks at 91.21. She wants to whack that 2005 high. Bottom line, folks, sell away. What do? You came down hard on New Year's Eve, which was just a total mind-blower, no doubt. Expansion of volume. Today, you get a dead cat bounce. Bottom line is that you're going to see lower markets. You're going to see them really quickly. If you haven't test drove the Nadex platform yet, folks, come over to our website at TFNN.com. You're going to see the banner on the top or the right-hand side. Hit that banner. You can bring up the account. They'll put $25,000 of paper money into your account. You can trade that and understand how these different contracts work. Now, let's go right over to the S&P. We take a look at the S&P. We'll go to the futures market first. And what you have inside the futures market is this. Monday, let's see, we're on Friday. This is a trip in itself. So Wednesday, what ends up happening? You come down and you come down hard, okay? We went from 2082 down to 2050 with juice, mind you, okay? What happened at that particular point is that you actually got back inside the lower range. That lower range sets up, as soon as you went back inside 2071, that sets up, you're going to run down to 1961, and what hasn't been tested yet is what? What hasn't been tested yet is the lows of October 15th, and that's where this baby's going, which is 1805. What we've done intraday out here is just a perfect setup, and specifically what it was is this, is that when we came down, folks, okay, on Wednesday, it was at 1520 hours. The S&P was at 2064. It ran down to 2005, and it did that with 39,000 contracts. When we came up here this morning, what we did is this. You bounced, and you bounced up there, and the first bounce, you had 35,000 contracts. The market just let go downtown again with 60,000 contracts. What you're going to see out here is this. Market-wise, you're going to have it bounce around. We're going to have a bounce on lighter volume up here. And what that is doing is that's going to set up a nice little ABC structure on the way down. The first structure more than likely will fill the gap in the SPY that was left over from the gap higher on the 18th of December. The top of that gap right now in the SPY is 202.34. Right now, we're trading out at 206.25. Our phone number is 877-927-6648. Let's go over to the gold contract. You can really have some fun with the gold contract, folks. Why? Because gold is refusing lower price. That is with the dollar at highs going after the 2005 high. The dollar is screaming, by the way, okay, that's not only going to be a pullback, but the longer that this dollar basically stays at the highs, the longer that they can't whack the gold contract somewhere under 1,100 with the dollar at highs. Bottom line is telling me that, guess what? Dollar's going to pull back dramatically. Gold wants to run up to this 1350 area. Right now, gold's at 1373. What we have out here this morning is that we are at 1173. Gold has gone to 1167. The price point you want to look at, which is already rejected, by the way, is 1170.70. That has 132,000 contracts. We've done 61,000 thus far. It's already rejected it. First leg up in gold, I suspect, is going to be the 1239 area. Bottom line, it's a nice setup. We go back over to, let's take a look at some of the high volume stocks in this market. It's going to be, I suspect, let's see, it's a little bit too early to really tell what type of volume we're going to come in with. We're at 101 million right now on the NYSE. In the NASDAQ composite right now, we're trading out at 259. What I do expect you're going to see out here, though, is this. You're going to see a bounce, and that bounce is going to be on lighter volume. That's the first part. And we got a nice little bounce going thus far, okay? But what you're also going to see is that as we come into the close today, you're more than likely going to see a flat market. So what you have is this. You had the downdraft that was created on Wednesday with volume. You're going to have a bounce intraday, which the Dow has already been up over $100. You get that bounce going, then you're going to see an additional sell-off. And what that's going to do inside the Dow Industrials is this. Your A point on the Dow Industrials is going to be at 18,103. Your B point is the low, which was generated at 820. So that's a decent one. That's a 300-point A to B structure. You see more than likely is going to be out here today, which is 951, which gives you a 17,600 Dow Industrials. We take a look at the SPX, the cash SPX. Inside the SPX, what we have is this. The SPX, the A point on that SPX is 2093 down to 57. So that gives you what? 57, 60, 70, 80, 90. That's about 37 points. And that would end up being about 2035. So this little baby is set up pretty good right now. And, of course, you get the first trading day of 2015. We go take a look at the small caps. What we have with the small caps is this. Small caps tested their highs, couldn't handle the high. If we take a look at this on a weekly basis, what you're going to have is this. You have the high that is out there at 120.58. And what we did is that we hit the 121 on Wednesday, 121.41, and then you closed underneath it. With that set up, that sets up, number one, a pullback to the 113 level, which is the low that was established on the 19th, and more than likely what you're going to see here is that we're going to go right after that October 15th. That October 15th level, folks, okay, straight across all the indices, all the equities, bottom line, that is a big number. And that's where this market wants to go. Our phone number is 877-927-6648. American Express right now is up 71. You got Boeing up 101. Coca-Cola is up 6 cents. We got Oxy down 191. You got Honeywell up 30. Walmart is back 69. Big Blue. Big Blue is trying to hang on, and guess what, folks? Big Blue is not going to be able to handle it. Big Blue right now is up 256. She does want to come into the 166.69 area. Right now, you're at 163. We got 1 million shares traded, and what you're going to have is that she's going into 23 million shares. So it's going to be wild watching this whole Big Blue deal shake out. We go over to Amazon. We take a look at Amazon. What we have with Amazon, Amazon right now is set up. We're at 311. Amazon is set up to get down to this 284 level. So inside the actual contracts, folks, when we talk the if you have that Nadex platform up, let's see, what time do we have right now? Okay, so it's at 10:17. There's a lot of different contracts you can deal with out here. This is going to be fast, furious, all of the above. And if you happen to be a swing trader, I suspect what you're going to have out here is that this is going to be some really sweet trading this year. Why? Because the way the market has set up, it's just set up just perfect. That there's not a bear in the world out here. I just heard, which was pretty wild. I heard on CNBC, one of the biggest bears that had been out there for quite a while. He was Rosenberg. He was out there and he was bullish this morning. So that's what it takes, folks. It's pretty weird how that works, but that's what it takes. If we look at the S&P, the cash, the future S&P right now, you're at 2050. What you're going to see is this. This is going to go after the swing point from Friday, which is 2050. And if it gets the type of volume that's generated right now, you're going to get a large ABC structure on the way down. The 8 point on this is 81. Your B is 50, so you got $31. which would get you into 2034. That's a long way down, man. That is a long way down, no doubt. If we take a look at some of these contracts inside the Nadex platform, we get, let's see, it's 1018 right now. So if you take the 10 to the 12 number, 2056, 205. Yeah, that one's not going to work because they're too close. When I say they're not going to work, the risk versus the reward. The closest one, what you want to do when you're trading these boxes, folks, okay? I call them boxes because what ends up happening, you have numbers, the top of the box and the bottom of the box. If you're buying something, you want to buy it as close to the bottom of the box as you can. If you're selling it, you want to sell it as close to the top of the box you can. You want to put that together with the aspect of where is your swing point. So let's go over to gold for a second because gold is absolutely refusing to get lower price. Right now, the gold contract, GCG5. So we were down at 67. She's already at 74, and she's going to be making the run. This is a trip. She's going to be making the run back up here to 82. This is Tom O'Brien. This is TFNN 877-927-6648. Dow right now is up 73. Nasdaq up 16. S&Ps are up 4.5. You stay right there, folks. Come right back.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives.
In an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
$5,000 of paper money into that account for you, and you can be out here understanding how these contracts work, number one. And you've heard many times the trade is your stop. That's what's so dynamic about these. So if we go, and they have a lot of different spread contracts, whether you're doing commodities, whether you're doing indices, and currencies. Right now, we're going to go in, if you're an S&P trader, which is a beautiful thing, you can go into the, they have 5-minute ones. I'm going to go into a 21-minute one right now. And a 20-minute binary S&P is saying specifically that 15 minutes from now, where are the S&Ps going to be trading? When we take a look about risk versus reward, we take a look at this. The S&P right now, we are at, this is the future S&P, we're at 2075, okay? 2057, rather. And what you want to be looking at is this. We just went from 6.6 down to 5.5, so they just gave up 10 points. What I expect you're going to see here is you're going to see a little slight bounce, and what you're going to be looking for is you're going to be looking for 2059. That is, you know, a nice little setup if it can get up to that area. And as you go over to these contracts, if we take a look at these contracts, oh, this is sweet too, and you actually have a 5.9 in here, so it'd be really nice if we got a little pop on that. So watch how this would work. This expires, this one here is going to expire, where am I? 13 minutes. Okay, so you get 13 minutes. So what I've found with these is this. If they're at 11 minutes or less, okay, that's really sweet because the premiums are coming out of them. Okay, so if we could get a little bounce, and a bounce for 2 points is not a huge deal, because what you would have is this, is that at this particular point, which is pretty amazing, you'd profits 2059, 2056, just give me a second. So I'm selling that, and you're selling that. Yeah, here it is. So watch how this works, because if this could get to 5.9, it'd be really a trip. So right now, we're at 2056. If I sold it right now, and what you specifically be saying is that it's going to close under 20... no, 1 second. Hold on. Maximum loss. Sell. I'm selling that. No, I got to get that higher, because right now that one doesn't work. Let me get this 1 second. 2056. Okay, bring this up. Sell. Yeah, here it comes. Okay, we got to let this thing get up higher. That's how this shakes out, folks. Okay, because what you'll get You want to bounce on these because we just came down 10 points. Okay, so if it can get up to the 5.9, your probability goes up higher. The amount of money you put up is lower. So we'll let that be until we get a little bounce in this market. Gold contract, this one's an interesting one, and this could have been a nice little score out here, no doubt, because what you have with gold, and on a longer-term basis, this is going to be a big number on gold today. Why? Because we got down to 67. You're at 75 right now. You only had 64,000 contracts traded. We're going into the 133,000 contracts, okay? You're going to get a rejection of lower price. You're going to have it on lighter volume than even the downdraft of the 22nd, but it's actually coming into the first. And the first, we had 342,000 contracts, so it's pretty intense. Let's go to Don in Odessa. Hey, Don, what's going on?
Hey, Tom. Happy New Year.
Happy New Year to you. Let's make it a great one.
Yeah, I hope so.
Totally.
Lord willing. I'll put it that way.
There you go.
Two questions here, and I guess the more important one would be between the two trading vehicles of GLD and IAU, which do you prefer?
So let's go look at them. So IAU is net assets. The assets of the trust will consist primarily of gold held by the custodian on behalf of the trust. So the IAU, or the iShares Gold Trust, let me just see this. So the benchmark, London Fix, cash. You just stay right there. We'll walk through this. This is Tom O'Brien. This is TFNN. We get Don from Odessa. We're going to be coming right back, folks. Dow Industrials are up 82. Nasdaq's up 12. S&Ps are up 5.5. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now up 60. Nasdaq is up. Nasdaq's flat. S&Ps are up $1.50. You got gold down 680, and you're going to have some wild trading out here, folks. This S&P right now just wants to blow away the low of yesterday. I expect you're going to get the volume that's on the way down. And King Dollar is up 623 ticks, and guess what? The gold market is saying, so what? What that is telling me that not only the volatility is going to be here, folks, but what you're going to see is, and I tell one of our tigers that no, I wouldn't be shorting gold right here, because what you're going to have, first off, it's going to go up to the top of that range, which we're talking about 83. You know, at 83 or at 77, see if it gets the juice at 83. At 83, it's going to need 2,100 contracts. Is it 20? Let's see. No, it's going to need over 3,500 contracts. But the way this is set up right now, I wouldn't be surprised that gold could actually run all the way to 1201 today. This is the ultimate, folks, of how they suck people into the market, get it all going, right? Whack! Give it to them. Don in Odessa, the question was, is it IAU or GLD? This is what ends up happening. They're both the same deal, basically. They just trade it. When you're buying basically the GLD, you're buying a lot more shares versus the IAU. What you have is that they both have ownership of physical gold. You know, one owns 5 million ounces and the other owns 22 million. So there's really no difference in the aspect. You know what I'm saying?
I do.
Yeah.
Okay. I figured as much, but I just went on to check with the expert to make sure.
Thanks, man.
My other question was, you're all gung ho about gold going back up to something today, and I'm looking at a chart.
Well, just so you know, just since we talked, okay, gold just spiked another $10.
I know. I've been watching it.
Yeah.
But I'm confused because we had a swing point. I'm looking at a 4-hour chart, and I looked on the 31st at 1 p.m. time frame, and it came down on higher volume. So I don't understand how you can be so emphatic about it. It's obvious that it's happening. I would not have made this trade just because of that reason. What did I do wrong?
Okay, so here, show me where now. What day?
The 31st at the 1 o'clock 4-hour time frame.
No, that's much lighter volume than going into either the 22nd. You're going into December 1st, man, which is such a monster day up.
I'm looking at on Ameritrade, the Thinkorswim charts, And at the 9 a.m. 4-hour time period, I have a volume of 27,657. This morning, I have a volume of 32,240. And that's only for the largest two volumes. So the actual swing point on my 4-hour chart is at 1 p.m., and that volume is only 14,761, which we broke with almost 3 times as much volume this morning.
Okay, so I see what you're just talking about, all right? What you have to do in all markets first, right, is understand what the big picture is, right?
Uh-huh.
And so the big picture in gold is that on November 7th, it rejected lower price, had lighter volume, and took off topside in a big time. Okay, we went from 1132 to 1178. Then we've had 4 additional signs of strength after that. So when you're tying these together, and this is important, folks, even when you're day trading. So when you're tying these together, you're always looking for where you get if something's going to go higher, you're going to get the correlation actually when it goes lower. You're going to get a better confirmation. So when we look at it, you know, gold goes from 78 all the way up to 1239. And at 1239, it even has nice juice. Then you back down, and every time you're backing down into this monster day of 342,000.
All right, I see that. I understand now. You just really cleared up the whole mess for me.
Yeah, it's...
I'm too myopic, I guess. Whenever I'm looking at this kind of stuff, I tend to look at not as many time frames as I actually should. So
you can do that, okay? But what does happen is this: is that the larger picture, okay? If you get the larger picture right, what happens is that when you break down the dailies and you break down the intradays, you can end up, you think you're a genius. That's what it comes down to. Do you know what I'm saying?
This ain't going to never happen with me, I'll tell you that.
No, it will happen. I'm telling you, it will happen. All it is a discipline to understand that you got to get the larger picture, and, you know, you have to get conviction that you have it, okay? And when you have that, it doesn't mean that you don't put the stops in all that, but when you have that, what happens is that the rest of the technicals make much more sense, because then they just come into harmony. It's like, oh, man, this is a trip. You know, so.
I understand, Tom. You really did help a lot. I'm still looking, and I'm still just on the daily chart.
Okay, so
as you're talking, I'm looking on.
Okay, now this is important too. no, stay with me. Anyone,
okay.
Folks, for all you folks that are in a gold and silver market, you have to keep your head wrapped around the dollar. Now, the dollar has been screaming that it is going to go lower, even though it's higher. I know this is a total mind blower, okay, but let me tell you something. With the dollar up 550 ticks, and it can't whack gold down, and it hasn't been able to whack gold down for 3 weeks, that is saying everything. That is saying, guess what, man? This freaking gold market's going to go to the moon. And I'm telling you, man, that's where my head's at. I think gold's going to go to the moon. I think something's laying out here, and it's a big number, man, you know, because it's acting so correctly, and if you put that together with the amount of bullishness, everyone's bullish in the dollar now. I was bullish in the dollar when we were 78. I mean, how many times are on CNBC they're saying, oh, the dollar's going to get down to 60? It's like, oh, really? No, the dollar already bottomed. Now all you hear is that the dollar's going to the moon. The dollar's done now. And the more I keep looking at it, I'm saying to myself, you know what? Whatever's going to happen here, the dollar's done, gold's going to go, silver's going to go, and the market's done. You know, this is going to be just a correlation, and it's about time anyway. You know what I mean?
Do you think that dollar's going to get up to that 92.53 mark?
Yeah, somehow it's going to make it. It's weird, but it's going to. I mean, look at as we're just. I mean, it wants to tag it, and more than likely, it probably is going to spike it, and it's still not going to matter. Meaning, and what I mean by spike it, folks, it's like almost too easy of a call that all it's going to do is hit it. You know, it's probably going to blow it away.
I see.
And what's probably going to happen on the blow away is that the market's going to freak because of the fact that the dollar's getting so strong. If I've learned anything in the last 30 years in the markets, is that fast currency moves, right, do a huge dislocation to, I mean, every large corporation, sovereign funds, all the above, because all of those large companies can actually do, they need low volatility, and they need methodically that things will be okay. They can't move fast. They're paranoid to move fast. And when things move fast like that, they freeze up. And in particular, what you'll see happen now, folks, because we've had 5 years of very easy markets. You get a whole new generation that's out there that's trading. You have plenty. You have a good 2 generations, folks, that have no clue about how fast currency moves can just crack everything. So we get action, man.
You got another time for a question for another? Oh shoot! Enough time for another question?
Sure.
Now that we've established that gold's going to go up, between the GDX and the GLD or IAU, for this time around, do you think gold stocks are going to beat the gold?
They've already beaten them. The gold stocks have already been. I don't like the GDX. GDX is a piece of crap.
Well, I don't buy it either.
Okay.
I buy individual stocks. But
yeah, but the GDX, but the actual gold equities have already been leading the, the contract.
Okay.
Yeah.
So, but do you think that they're going to continue doing that?
Yeah. Yeah.
Okay.
Yeah.
I won't ask too much since I don't pay for your gold report. So.
Hey, go test drive it.
I have before, Tom. I'm too poor to be affording all you guys rich guys reports. So maybe when I earn a little bit more money here, I get more time to do this. And as I earn some more, I'll be able to afford to do more. I'm a firm believer in the service that you guys provide, though. So.
Okay, man.
That's not the problem.
No, that's cool. Listen.
Thank you.
Have a great one, man. Have a safe one.
Bye-bye.
Gold right now, folks. This is a sweet setup. This is pretty sick. So we've had an expansion, folks, from 67 to 92 right now in gold. You're going to see this is going to be a one-way move, man, and this one-way move is going to be a mind blower. And it's just so freaking set up right now. It's crazy. Bonds. Let's go over to bonds. Hey, so check this out, man. Bonds, okay, are going to do an ABC structure on the way up. This is going to blow people's minds away. I'm telling you, folks, we can have some fun trading out here. I mean, it's fun out here right now, but this is only the beginning. And so the 30-year bond market right now, right? We've already done 1.6 million contracts. Yeah, and we get cheaper mortgages coming. There's no doubt. Okay. Well, guess what? What you have out here is this. We're going after the swing high of 146.19, and more than likely you get an ABC structure on the way up. And this is going to be the one that's going to absolutely blow people's minds away. I mean, it's set up. The bond market's been screaming it wants higher price, and it has the characteristic that it has is absolutely amazing. I mean, each and every leg higher, you're going with volume. Each and every leg lower, you get contraction of volume in a dramatic way. So it's all out there. If we go back to those S&Ps again and you take a look at them, the ESH5, what you're going to see is that we're doing an ABC structure on the way down. This is a monster, folks. This is a 30-point ABC structure on the way down. 30 points off the, 2067. We can be at 203. 1 second, hold on. 37. We can be at 37. We get 10 more points to go down. That's only the A to B equals C to D. That's how this baby shakes out. So bottom line is that you can get some nice volatility out here. You can expect that that's going to continue. We go take a look at the small caps out here, and the small caps are leading. There's no doubt about it. That's one of our tigers. And if you haven't test drove that Nadex platform, folks, one of our tigers in the den right now is making a fortune on it. There's no doubt. It's a beautiful thing. The small caps are screaming. What are they screaming? Guess what? They're screaming that they're going to run down to the October 15th low of 103.54. You're down 127 right now. You already did 11 million shares. And we made a high last week, folks, at 27 million shares. This thing is fast. It's furious. It's all the above. We take a look at this on an intraday basis. And when we have intraday, oh, man, they're unloading. See, the small caps are wild because what happens with the small caps, folks, is that when they go, and that's both ways, but when they go, man, there's just no one on the other side of this bid. There's, they just have to just dump them. The small caps went down a point in 10 minutes. And that is one big number. But what you're going to see, this thing's not going to stop because all the correlations that we just talked about, meaning you have the dollar at highs for the last 10 years. They couldn't whack gold, and the bond market, okay, is screaming. So the two biggest things that I would say out here that will tell you where the market's going is the dollar and the bond market. And the reason being is that with the dollar at such highs, gold should be smoked. It's just going the other way. The bond market just refuses. If you actually look at the Wall Street Journal today, there's not one person does not think that the interest rates are going up this year. Guess what, folks? They're going down. They're going down. They're going downtown. And what's that going to be all about? That's all about we are still paying a fortune. Our government is still paying a fortune to interest to investors. We're paying 2.1% for a 10-year. It's like, really? Why are we paying 2.1% when Germany's paying 0.4%, or Italy's paying 1.7%, or Spain's paying 1.5%? Makes no sense, okay? Europe is toast, you know. So you can see that is the supply and demand characteristic of the marketplace. And that supply and demand characteristic, you know, when I do price and volume, that's all that's really about. What price and volume, the art of time in the trade is about, is that where is the supply and demand? That's what it comes back to. Where is it? Where is it, and what is it doing? In this particular case, bottom line, the supply and demand, there's more demand than supply inside the bond market in an incredible way. What you also have is this. Now, check this out. This is going to be a trip watching how this shakes out. We just finished the year. The real key is that how many folks sold at the end of this year, and they're going to pay their capital gains tax, right? What is the tax collection that's going to come in for the good old U.S. Treasury? And what is the tax collection now? I suspect what you're going to see, the tax collection is going to go up dramatically. What's that going to do? That's going to bring the deficit down. Bottom line, it's just the opposite of what many folks have thought for so long, that whether the deficit's going higher, oil's going higher. And let's go to oil market for a second. Oil's toast. Oil's going to $32. It's going to be wild watching this whole thing shake out. And today is even a better confirmation. And why? Because oil, again, got up to 55.11. Can't hold it. You're at 52. This is going to be a monster ABC structure on the way down. $32. Everyone's getting a payday, a paycheck, folks. Every fill-up is going to be a monster pay hike. How good is that? This is Tom O'Brien. This is TFNN. You stay right there. We're going to be coming right back. Dow is up 16. Nasdaq's down 19. S&Ps are off 3.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. And if you haven't test drove that Nadex platform, folks, get over there and do it because it's a great time to do it. You hit the banner on the right-hand side. As you hit it, you bring it up. They'll put $25,000 of paper money into it. You'll start to get to understand how these contracts work. And you know, when we're talking about the contracts, folks, you can do the contracts on all the indices, the Dow, the NASDAQ, the Russell, S&Ps. You can do the contracts on the currency markets. You can do them on commodities, all of the above. Bottom line is that what you're looking for is that you're looking for volatility. And there's no doubt you talk about volatility, well, we got volatility in spades out here. So if we go take a look at this S&P, okay, what you have inside the S&P right now, the future S&P, we take a look at this and we put this just on a 10-minute basis. So we went straight down from 67 to 45. Nice move down. Now, what we have is this. This is what's really cool if you're day trading these. We have a high volume spike low. So the first thing it says is, guess what? We're going to go back to 45, which is beautiful because we're at 50 right now. Now, the harder part is that, okay, so where's the bounce going to come in? Well, what I like to do with these is this, is that, you know, you can turn around and say, okay, what's the retracement value? That's one way you can look at it. And you say, okay, you know, from top to bottom, what do we just do there? Okay, so if we do a 0.382, you know, that goes to 5.3. That's a normal retracement. But what happens at 5.3 is this, is that your back is not against the wall. So when you do a day trade or a swing trade like this, what you want to do is this is where the patience comes in. You kick back, especially what happens in the morning like this. Have a cup of coffee and just kick back and let it go, let it come to you. Because what should happen is this, is that you're going to get a retracement, and this retracement can really almost go up to 57. That's what you'd like to see. Why? Because then at 57, your reward goes up dramatically. Because you're at a 57, you're looking for a 45. Okay? What also happens is that you can put your stop on the other side of 60. But of course, what happens with the Nadex product, which is just beautiful, your trade is your stop. Okay, so that would be the next trade if you're trading. Well, if I was trading just the S&Ps, I am trading the Nadex product. So the bottom line is that you just sit there and wait. That's the name of the game. If it comes back down again, guess what? You don't have the trade. So what? The bottom line is that the first trades that were out here were extraordinary. So now it's the waiting game. That's inside the rest the S&Ps. And okay, if you don't have the futures, the way you look at that is this. I'll go and put the SPY up. If you put the SPY up, what you're going to be looking for is this. Because you need the correlation of the volume also when you're doing this. So if we put the SPY up, what you have, I don't want 3 days, I want 2 days. Okay. So this is what you do when you put the SPY up. What we did is that you get a high volume low right now at 204.83. That was 5.3 million, right? What you're going to be looking for is that you're going to be looking for right there. You're going to be looking for a bounce up to the 94 mark, and you're going to be looking for that with less than 4.5 million shares going into that. If that's what you get, guess what? What that means is that that's a dead cat bounce. It's going to be lighter volume. You can put your stop right on the other side of it, and you get real action. Okay. So what you're doing is you're correlating, okay, your price, your volume, with the larger correlation as to do you have a high volume swing low. And right now, all the indices have a high volume swing low. You stay right there, folks. Man, Mr. Basil Chapman's going to be coming back with you growling and prowling. And Nico and Paige are going to keep you healthy. And we'll be back this afternoon, folks. Have a great one. Have a safe one. And make lots of money out there. 2015. What a beautiful thing.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.